Total dedicated reinsurance capital jumped by 7% in 2023 to reach $568 billion, dollars, with an even larger increase projected for 2024. This, according to a new report that's part of AM Best's overall look at the global reinsurance industry ahead of the Rendezvous des Septembre in Monte Carlo. We're joined today by AM Best Associate Director Dan Hofmeister. And Dan, there's some telling data within the report about capital levels. What's happened with the level of traditional capital in the reinsurance sector?
Yeah, John, we witnessed a 14% increase this year in traditional reinsurance capital. It's about $57 billion of capital coming into the market. Really, that's coming in twofold, right? So we had the investment losses last year, which was pretty significant. The unrealized position on the bonds has been recouped somewhat. And then the market as a whole has performed well. We've also seen capital raises among some of the Bermudians, RenRe and Everest being two that have been names out there in the industry. So quite a few factors playing into it this year, but again, the largest increase that we've seen in recent years.
So it's been noted that third party or non traditional capital no longer has that purely competitive role. What does the report say about the volume and drivers in that area?
Yeah, and this has been a factor for a few years now. I think the ILS market's definitely been more of a complementary figure for the reinsurance market as a whole. So we're seeing capital rise for 2024. We're expecting it between 5 and 10%. There's been a lot of growth in the cat bond market as well as the collateralized re-market. But a lot of this is retro coverage and kind of adding capacity for the reinsurers in the future years.
How has the implementation of IFRS 17 accounting standards affected the capital levels that are detailed within this segment of the report?
Yeah. Well, it's certainly taken a lot of our time as analysts to dig into, but ultimately it doesn't really have an impact. And we've been steadfast in saying that it shouldn't really impact the capitalization of a company or the way that we view their financial strength. However, it does impact some of the KPIs. So going forward, as these companies adjust to it, we might see if that shifts the way that they think about it. But ultimately, our position and our available capital estimates within the reinsurers doesn't change as a factor of it.
Thanks, Dan.
Thank you.
That was AM Best Associate Director Dan Hofmeister. You can find the full report online at ambest.com. For AM Best TV, I'm John Weber.